Hey traders, Ed here from Revolution Swing. I'm sure we all found ourselves questioning whether or not to enter a swing based on what the current market conditions were at that moment, especially when the market is showing strength or weakness in the opposite direction of the move you were looking to capitalize on. And in this lesson, I'm going to go over one simple rule I utilize almost religiously to help preserve the integrity of two of my top objectives: preservation of capital and account growth. So, without further ado, let's get into the chart. All right, guys, so let's get into the chart. So you can see here I have the SPY up and I have Bank of America. Now, this is completely just for visuals. This is nothing I'm looking at. This is not a potential swing. So, don't take it for more than what it is. But it's a good visual representation of, what I'm trying to show you. So, a little backstory before I start digging into it is when I first started, I have the type of personality that will really try to overanalyze everything. In the beginning, I found myself doing that on charts, especially in situations to where, for visuals, let's say we were shorting Bank of America here, the market was strong. So I have the ability to sit there with my personality type and overanalyze a 1 minute candle for an hour if I wanted to. Looking for subtleties, how it pushed up, how it dipped down. Did it sit there and flutter? It moved a certain way, right? It doesn't necessarily mean I wasn't seeing certain subtleties that meant something, because I looking back, I know I was, but I wasn't prepared to use them in the manner that they needed to be used. Okay. Those are things that you develop with screen time and things that you develop with getting used to how certain stocks move, because you got to think that these all have their own personal, different personalities, and they will all move in certain ways different from each other stock. Now, naturally, they all move up and they all move down. That's a common factor that they all have, but they all kind of move in certain ways. So in this example, you can see this the SPY. The market is strong, right? And let's say if you look at the daily down here, we were looking to short Bank of America. This one rule that I put in place for myself, because I am the type of person that will overanalyze everything, definitely made a difference in my trading. Okay. And it eliminated fears about entering the trade and second guessing myself. So let's say we were looking to get in Bank of America. These were entry levels, and this was potentially a stop, right? And let's say it's Monday, and it's coming up, and I'm like, man, I don't know if I should enter it, man. Like, you're worried about saving money. You don't want to lose money, and everybody always wants the trade to go into their favor, right? But you can't worry about things like that all the time. As long as you have a good plan, a good strategy, and you're managing your risk and putting the two most important things you could put first and foremost, which is preservation of capital and account growth, right? With the rule I put in place for myself was, so let's say it's pushing up and I'm unsure if I should enter or not, because based on how the market is, because I'm looking to make a move opposite of what the market is showing right now. Well, it's very simple. All I started doing was not taking the trade, and I would wait to see what it did the next day. Like, a very simple concept, but a lot of new traders, especially a lot of gung-ho traders that are new, get a little impatient. And a little patience and just waiting that little bit, just 24 hours, can make all the difference in the world, right? Because let's say you entered and the market's strong and it's a Monday. Now, come Tuesday, there is no way for anybody to be able to determine how much a stock is going to gap up the next day. Okay? Now, let's say you entered here and it's super strong and it gapped up all the way up to here, right? Now, I mean, on this visual, it's not a wide amount of risk, but potentially it could be, depending on size and things like that, right? And you don't want to be underwater that much, right? So waiting that one day, I would wait to see where it gapped up. How it gapped up, did it gap down, did it gap up, how much it gapped up, okay? And let's say it gapped up to here. I'd be like, okay, it's still got some strength. And I would watch the market on Tuesday and seeing what it did. And let's say this is Tuesday and the market's still strong. Well, I probably would make the conscious decision not to enter the trade to see what it did the next day. Okay? And let's say come Wednesday, it gapped up. But very slightly. It still stayed in this range right here. Okay? With the market showing strength. Okay. Now it's starting to show its hand a little bit. It seems like it's tiring out, right? At that point, I potentially would make the conscious decision to start entering in, right? And I would enter in as high as possible, obviously. And I would enter in small. I wouldn't go full boat to see what it did. And then come, let's say Thursday. Well, it gapped down a little bit. Okay. Well, there's always that chance and that potential that it's going to want to retest. So I'm already in. Now, the good thing is you're already in the event that it decides to dump. Okay? You didn't get a full position in, but at least you're in and you'll be able to make a trade and pull a trade off. But let's say, it does decide to want to retest a little bit and push up. It might not come as high, right? That's where you're able to do your add and then ride it out and see what it does, okay? But waiting that little bit of time to letting that particular stock show its hand will make all the difference in the world for you guys. I promise you that. When you have a proven strategy that has a high success rate, it's important to really take the time to recognize and identify any underlying issues about yourself and put mechanisms in place to fix the issue that work with your strategy and not against it. So, with that being said, I hope you liked the lesson and I hope you learned something. And remember, if you want to get properly educated on how to trade stocks by a true professional with a proven strategy, head to tricktrades.com. And if you want to use that education to grow your account while you learn with killer swing trades, head to revolutionswing.com. So, until next week, this is Ed signing off.